Separate from the buyout or the bailout, Warren, people obviously this morning want to look at the Goldman deal. I guess on top of Mitsubishi Morgan, which happened yesterday and wasn't nearly as popular, or at least from a market point of view. But they want to point to you as the canary in the coal mine. Is that fair? Do you have a problem with that?
Well, as long as the canary lives, I'm fine.
Well, I'm guessing you're going to live. I mean, at least you're guessing you're going to live.
Yeah, I think so. But this is, from our standpoint, we've had a lot of cash, and we now are seeing things that, give us a chance to use that cash sensibly, and this was a $5 billion opportunity to, I think, deploy cash sensibly. And I understand, incidentally, that there'll be another $5 billion. In other words, they mentioned $2.5 billion, but I think they're going to allocate it down to $5 billion additional. So Goldman will have $10 billion, I believe, of new money coming in.
In that capital offering, in the release they said $2.5 billion. You're saying you understand it's $5 billion?
Yeah, I think they had quite an outpouring of orders. So I think that they'll be allocating it down, but I think them all over the world. So I think there'll be $5 billion of additional common stock sold. That'll be determined and announced, I believe, before the opening.
How much do you know about AIG in their books right now, Warren?
Well, I think I know a fair amount, but I don't think anybody knew as much as they needed to know, including the management. And the troubles there were in the subsidiary of AIG Financial Products, and they had hundreds of thousands of derivative contracts, and I think that top management did not have their mind around what was involved with those contracts. And you can do a lot of damage in Wall Street with a pen and a piece of paper.
How many of those units are going to end up under the Berkshire umbrella?
Well, we would have an interest in a couple of them, and actually over that weekend I expressed an interest in one or two, but the pressures were such and the hole was deep enough that they simply couldn't get it worked out. And some of those units, most of those units, I believe, will be for sale over the next year or two, and we would be interested in a couple of them. I think they'll probably do a pretty intelligent job of selling them, which means we won't be as good a buyer.
Warren, we've been trying to figure out, I have to admit, I was shocked when I heard the news yesterday about this deal with Goldman, because you haven't put any money into an investment bank since 1987, Solomon. And that was a deal that you had to personally get involved with later. In 1991, when you went to run the company for almost a year, it was a very difficult experience. I'm shocked that you would get back in with another investment bank. Why do it?
Well, the pain is worn off. That won't be happening with Goldman, but that was a very unfortunate experience, and it was actually caused by just a couple of people out of a workforce of 8,000 that got the company into big trouble, and I had the help of a lot of people in Solomon getting out of it, but I don't think this experience will be similar. Goldman has been extremely well run. My experience with Goldman goes back when I was 9 or 10 years old. My parents took me back to the New York World's Fair, and by an odd chance, I got to sit down with Sidney Weinberg, who was the dean of Wall Street then, and he talked to me as if I was a grown-up for 45 minutes. I've never forgotten the experience. Gus Levy was a good friend of mine. When I worked in Wall Street in 1955, we only had 4 wires to Wall Street firms, and one of them was to Goldman Sachs, and Gus was on the other end of the phone. So I've had a long experience with Goldman, and they've done a lot of things for me recently.
I just assume you know what was going on at all of these firms, because I know everybody probably came to you and you made your decisions one by one on what to do. When you look at the way some of these assets were marked, could you tell that for example, Lehman still wasn't facing reality and perhaps Merrill Lynch was more in the real world?
Well, I think that turned out to be the case. I was approached on Lehman back in, I think, maybe it was April or March, the first round of financing when they raised the $4 billion, and it looked to me like it was pretty unrealistic where they were marking things. I feel good about the Goldman marks, incidentally. That's one of the discussions I've had, and you can be pretty fanciful in marking positions. in Wall Street, and particularly when things aren't trading. And the one thing you want to make sure when the Treasury is buying things is that the marks they have don't make any difference. I mean, and like I said, it would be a bad idea if you're buying $10 billion of securities near the Treasury to have them sell $500 million or something like that into the market, so you find out what the real market price is, and then buy the other $9.5 billion at that price. I really think the Treasury will make I think they'll pay back the $700 billion and make a considerable amount of money if they approach it in that manner.
Right.
But I don't believe in trying to write that into some legislation. I think that it gets so unworkable. I think you have a smart person in charge and have them treat it like it's their own money and the taxpayers' money in terms of behavior. And I think it'll work out very well. It's not comparable to the RTC.
A lot of people who are watching us, Warren, and even people who have just started watching us over the past week or two, look at the stock market every day and are confused. They want to use it as a metric for how we're doing, or at least the progress we're making on big issues. I'm guessing you don't think it's reflective of anything that's based in reality right now?
Well, stock market in the short, my old boss Ben Graham said the stock market in the short run is a voting machine, and in the long run it's a weighing machine. But as a voting machine, it responds to people's emotions. There's no literacy test for voting. You vote according to how much money you have, not according to how smart you have. So the stock market does some very silly things in the short run. Over the long run, it behaves quite rationally. And 5 years from now, 10 years from now, we'll look back on this period and we'll see that it could have made some extraordinary buys. That doesn't mean they won't get more extraordinary a week or a month from now. I have no idea what the stock market's going to do next month or 6 months from now. I do know that the American economy over a period of time will do very well, and people that own a piece of it will do well. But they shouldn't own it on leverage. I mean, that's what people have learned in this period, that you've got to be able to play out your hand, and it's a big mistake to let somebody else be in a position where they can sell you out.
Warren, when you first invested back in '87 in Solomon, I believe your partner, Charlie Munger, was not as enthusiastic about the idea as you were. Is that true?
Well, that's true. Of course, he's never as enthusiastic about my ideas as I am, but I would say he was even less enthusiastic.
How does he feel about the Goldman deal?
Well, I'm glad you asked, because I didn't tell him about it until after it was done, and
how rude.
It is kind of rude. But Charlie's wife had a bad fall, and he's up in Rochester, and I called him last night about an hour after I committed or something, and I called kind of like a little boy breaking into the house, something he was a little worried about. But Charlie's all for it.
He's all for it.
Yeah, now I'm really worried.
Well, over the last 9 months, Berkshire has spent a lot of that cash it's been hoarding over the last several years. I was trying to figure out, I think it's about $24 billion you've spent in the last 9 months.
Yeah, we spent a lot of money, but the money we've spent, we found things we like to do. It's nice to have a lot of money, but you don't want to keep it around forever. I mean, I prefer buying things. Otherwise, it's a little like saving up sex for your old age. At some point, you've got to use it.
$24 billion. Is that a right guess? And how much cash do you have left on hand?
There would be 6.5 for the Mars deal. There's 5 for this. There's 5 for Constellation. There's a couple of other things. So, yeah, your addition is fine, Becky.
So how much cash do you have left?
Well, I've got enough, but I don't really look at it every day. I look for opportunities every day, and then if I find opportunities, I see if I've got enough cash around to take care of them.
Well, by my calculation, if you lever that up 30 times, Warren, you can really get serious here. Maybe you don't want to do that. I don't know. What about how are we going to deal with this looming 50? We just had Eric Dinello on. I don't know if you were watching, Mr. Buffett, but he talked about he can maybe New York in his unit can look at the 12 billion or trillion. Geez, we got to add a T. I'm finally getting used to B's. Now we got to add T's. But what are we going to do with that other 50 trillion, and how, having that still around, all these credit default swaps, how serious is that, and how are we going to unwind it and deal with it?
Yeah, well, it goes beyond credit default swaps into all forms of derivatives. But the derivative genie got out of the bottle, and it's a huge genie, and it'll never get back in the bottle. It is a terribly tough problem because they are not homogeneous items. I mean, it's one thing to have a clearinghouse for the futures in Chicago or something, and every morning have everybody post a market, and that's a very efficient system. It's very hard to do that with derivatives, where you can have derivatives based on the New Zealand money supply and the number of babies born in Japan and all kinds of things as the variables, and they're often very complicated. So I applaud Danilo. I mean, he is an outstanding insurance commissioner, but getting regulation around the entire derivatives market is really a tough thing. I thought a lot about it, but it's important. I mean, derivatives have been an important part of the problem in financial markets, and they continue to be part of it. And in AIG's case, AIG would be doing fine now, I think, if they never heard of the word derivative.